Hello, and good morning, guys. It's a lovely Thursday morning. Today is the 9th day of July 2026, and this is what we were looking at yesterday. This was our analysis on gold, and this was well, the levels we were watching yesterday. We were looking for potential buys above this level. We never got the buys, so we never got a signal for the buys. Potential sales, we were looking for potential sales below this level. This kind of pushed down all the way down, close below this resistance, this support, and also close below this other support here. So what it did, didn't retest the first support here that it broke. It retested this support here and continued pushing down. So this would have been a nice entry, but now the stop loss would have been a very big stop loss. In pips, let me see how many pips that is. The stop loss would have been very wide all the way from here. So you'd have placed your stop loss up to this, the height of this candle here. All this would have been your stop loss. That's 300 pips, over 300 pips if you were to place it above this structure here. That's around 361 pips. You see, that's a very big stop loss. So I didn't take this trade here, but you would have taken the trade here. Why risk 300 and you see, this is the logic. Why would you risk 370 pips just to get how many pips? 357 pips, or even 646. The risk to reward doesn't add up. Okay. But if you'd have held it to this level here, that would have been a risk to reward of at least 1:2. If you had held it all the way to this level here, because that's 650, and the stop loss would have been 380, 383 times 2. No, it's still 1 point something. Still doesn't fit my trading style. So I didn't take that trade yesterday. I just decided to sit on my hands, see what the market will do. And this is what has been happening. Remember yesterday, Trump tweeted and said that the ceasefire deal is off. That was hours after the US had launched fresh attacks on Iran. So this thing between the US and Iran, it's long. It's not over yet. We still have a lot to see. Okay, so real quick, we're gonna remove everything here. So yesterday was another no trade day, so we're gonna remove everything here and look at what we have on the fundamentals. What do you expect on the fundamentals on Thursday? We have nothing high impact. We have no red folder news. Just some low impact data at 3:30 p.m. The unemployment claims, the previous was 215. The forecast is 218. Let's see what the actual will be. If the actual is good for the dollar, then it could give us some push down on gold. But if it's bad for the dollar, then it could give us some push up on gold. If it's good for the dollar, you could see gold pushing back a little bit. But if it's bad for the dollar, you could see gold pushing up, paired by the fresh attacks on Iran. Gold could be on the journey back up. Okay, so watch out for that. And let's do our analysis for today. Let's do our analysis for today. A fresh new analysis every morning because the market is very dynamic. What it was yesterday is not what it is today. The levels you were watching yesterday might not be the levels you need to focus on today. So real quick, that's our resistance up there. That's our support down here. Down here we have our support, which is also this level here, where this candle is. That's our support. I jump down to the weekly. On the weekly, that's our support. We have our resistance at this level here. We have our resistance at that level there. On the daily, we still have our resistance up here. The support is down there. This is still the daily support. We have our resistance up here. This is our daily resistance and the daily support. Jump down to 4 hours. On 4 hours is what you are looking at. On 4 hours, we have this break of structure here, break of structure, another BOS here. Then there was a market shift here. Once the market gave us this shift, this was our low and this was our high. So on 4 hours, we have this high here and we have our low down here. So this is what I'll do today. This is what I'll do. So the 4 hour low, once we had this breakdown here, this was the 4 hour low. So what I'll do, I'll move this to the body here, move that to the body there. And move this one to the body here. Identify these levels as targets. Identify this as the levels as a target too. There's this level here. And then there's this level here. Okay. Good up to there. Yeah, I believe you're good. So jump down to 1 hour. On 1 hour, we're going to readjust this to readjust that onto that level there. So now we can get rid of this one. So these are the levels. These are the levels we have here. Is a 4 hour range from here all the way up to here is our 4 hour range. So on 1 hour, we had this POS here. This is the most recent POS. Yeah, we have this POS here. That's a BOS there. We have a BOS there. There's no change of character here. This was just a liquidity sweep. This was a sweep of liquidity, swept liquidity above this high here. So we've not broken above. So 1 hour, this is our high, this is our low. So this is our support here. This is our support here on 1 hour. This is our 1 hour level. And this is our resistance up here. This resistance has not been broken. This is our 1 hour resistance, 1 hour support. But what time was this? 9. So this will be our 1 hour high. This will be our high on 1 hour. Because if we leave it there, it just shows that liquidity was swept above this level here, and now the market would be coming up here, and then we could see a push down. Okay, or if it breaks above here, if it breaks above this level, we could see a push up. So let's use this as our high here. If we get a break above this level, we could see a push up to these levels here, these levels here. If we get a break below this level, we could see a push down to these levels here. So that's our 1 hour levels. Jump down to 30 minutes, and on 30 minutes we're still on the same, but we had a shift here. We had a market shift here on 30 minutes. So let me mark that for you. On 30 minutes, the market gave us a shift there. So this is our 30 minutes low, and this is our 30 minutes high. This is the farthest I'd want to go with this analysis. 15 minutes. I'll jump down to 15 minutes if I get see we still have the same levels on this 15 minutes. But I jump down to 15 minutes once my 30 minutes gives me a confirmation here. If I get a candle closing above, that's when I jump down to 30 minutes for execution, 15 minutes for execution. Okay, so this move this level to that body there. Now this is 30 minutes. On 30 minutes, you do what you did on 4 hours. So move that there. Then identify these levels. Identify that level there. That's our potential buys above. And identify this level here. That's our potential sells below. Okay. So this is how I would be looking to trade this market. This is how I'll be looking to trade this market. So should I get a break above? If I get a break above, I'll be targeting these levels here. This will be my target, one of my targets. Target this other level here. Before we get to this level here. And finally, if we have good momentum up to these levels here. So on the sell side, my target will be, I'll be looking to target that low there. If I get a break below that low, I could come to this low here, and finally here, and this levels here. So this is what I'm looking at today. This is my focus today. This is my focus today. How do you wanna get in here? How do you wanna get caught in between here? Because you see, we had this break of structure here. This was the last break of structure. After this big push down, we had this break of structure here. Then the market gave us a shift here. Once we had this shift here, the market has neither broken above nor below. Okay, remember we had a liquidity sweep above here. This was a liquidity sweep on the 1 hour. This change of character was just a liquidity sweep. So you could expect anything. If we get a break above here, this is a very good buy up to this level here, and perhaps this level and this level here. If we get a push below, if we get a break below, today's Thursday. If we get a push breaking below this level, we could see the market coming down to these levels here. But if for those of you who think this this gap is tradable, those of you would want to trade this gap here, that's 200 pips. Not bad, not bad. You could trade this gap here, or push it down to this level, about 300 pips. That's about 300 pips. That's also tradable. So let me see. 300 pips is not bad. not bad for a sell. So short position now. Uh, if we get a break below this level here, you could target this low here. Not target. Your entry could be on that. That's a high risk sell. It's a high risk sell from here to here. Stop loss just above that resistance there. That support, which will be turned resistance if we get a break below here. The support turns into resistance, so we're just waiting for a tap. Then take the market to these levels here. If you're lucky, if it plays out in your favor, then you could take the market there. So for the safe sells, I'm looking to take a sell from this level here. Stop loss just above that resistance there. Then push the market down to this level here. And if we have some good momentum, perhaps we could touch that level there. So that's my target for today. That's on the sells. And on the buys, long positions, I'm looking for a trade above this level here. If I get a candle closing with good momentum above that level there, my stop loss just somewhere below this resistance, which will be turned into support. If we get a candle closing above this level here, good bullish momentum, I could take the market target this level here. That's my take profit one. Then we have these levels here. No, that's my target. That's a target. We have that level there. So perhaps we could, if we get a good break above here, could push the market up to here. Or all the way up to this level here. If we get a good break above this level, could push the market to these levels here. Okay. So let me see on 4 hours how it looks like. And so on 4 hours, yes, if we get a good break above here, we could push the market to here. If it breaks above here with good momentum, then push the market all the way to this level. But first, look to take your profits out at that level. Take your profits there. Take your profits there. But if the market shows it has good momentum to continue pushing up, you could push your profits. You could push your trade to this level here. But first, take your profits there. Okay. That's my outlook for today, and that's my trade idea for the day. For the sales, if we get a break below here, you could push your trade to this level. That's the high risk entry. But if we get a confirmation, actually it's not that high risk, because if this candle or the next candle closes below this doji here, it would mean the market would trace to this level and push downwards. So this liquidity has to be swept. The liquidity below here will definitely be swept. So this is a good trade to take. And if you get a good break below this level, then you could push the market down to this low here. Take out this low, sweep the liquidity below here. So that's my outlook for today. So remember, as I always say, trade what you see, not what you think, and manage your risk, risk manage your trades well. I'm out, guys. See you tomorrow for a recap on the same. Ciao.